How to manage your business finances like a pro. A beginner's guide. Hey everyone! Welcome back to the channel, where we help you level up your business and build the financial freedom you deserve. If you're new here, don't forget to hit that subscribe button and tap the bell to make sure you never miss a video packed with tips and strategies to grow your entrepreneurial journey. Today we're diving into something every entrepreneur needs to master: managing your business finances like a pro. I know finances can be intimidating, especially if you're just starting out, but trust me, once you learn the basics and put the right systems in place, you'll feel empowered to make smarter money decisions and grow your business faster. So if you're ready to get your business finances under control, make sure you stick around because I've got some easy-to-follow tips to help you manage your money like a pro, even if you're a total beginner. 1. Separate your personal and business finances. Let's kick things off with one of the most important steps for any entrepreneur: separating your personal and business finances. This might sound like a no-brainer, but you'd be surprised how many new entrepreneurs mix their personal spending with business transactions. It's super tempting to just use one bank account for everything, especially when you're starting out, but trust me, keeping things separate will save you a lot of headaches down the road. Here's why it's important. First off, when tax season rolls around, having separate accounts makes it so much easier to track what's a business expense and what's personal. This way you don't miss out on any important tax deductions or worse, risk getting into trouble with the IRS. Also, when your business starts to grow and you need to apply for a loan or seek investors, having clean, organized financial records will make your business look more professional. So, step 1 is to open a dedicated business bank account. It's a simple move, but it's one of the most important steps you can take to set your business up for financial success. 2. Set up a simple accounting system. Next, let's talk about setting up an accounting system. Now, I know accounting might not be everyone's favorite topic, but having a clear system to track your income and expenses is absolutely crucial for managing your business finances. Here's the good news. You don't have to be a financial expert to manage your business's books. There are plenty of easy-to-use accounting software options out there like QuickBooks, FreshBooks, and Xero that can automate a lot of the hard work for you. These tools help you keep track of every dollar coming in and going out, categorize your expenses, and even generate financial reports so you know exactly where your business stands. If you're just starting out and don't want to invest in software right away, you can even use something as simple as a spreadsheet to track your income and expenses. The key is consistency. Make sure you update your records regularly, so you always know how much money is coming in and where it's going. Also, consider hiring a bookkeeper or working with an accountant as your business grows. A professional can help you manage your cash flow, prepare for taxes, and make sure your finances are in good shape. If you prefer to do it yourself, just be sure to review your books monthly, at the very least, to stay on top of things. 3. Know your numbers: profit, cash flow, and break-even point. Now let's talk about some key numbers you should know as a business owner: profit, cash flow, and your break-even point. These are the metrics that will give you a clear picture of your business's financial health. First up, profit. Simply put, profit is what's left over after you subtract your business expenses from your revenue. A lot of new entrepreneurs focus on generating more sales, but if you're spending more than you're earning, you won't be profitable. And that's what truly matters for long-term success. So, keep a close eye on your expenses, and always look for ways to maximize profitability. Next is cash flow. Cash flow is the money that's moving in and out of your business on a regular basis. Positive cash flow means you have more money coming in than going out, while negative cash flow means the opposite. One of the biggest mistakes new entrepreneurs make is not managing their cash flow properly. You might have profitable months on paper, but if cash is tied up in inventory or unpaid invoices, it could lead to a cash crunch. Be sure to track your cash flow closely, and if you ever run into issues, consider options like financing or adjusting your payment terms with customers. Finally, there's your break-even point. This is the amount of sales you need to cover all your business expenses. Knowing your break-even point will help you set realistic sales goals and understand how long it will take for your business to start turning a profit. Once you hit this point, every sale afterward will be pure profit. So, make sure you calculate your break-even point early on to set your business on the path to profitability. 4. Create a budget and stick to it. One of the biggest challenges for entrepreneurs, especially when you're starting out, is managing your spending. This is where a solid budget comes in. A budget helps you plan your expenses, so you don't overspend or run out of cash when you need it most. Here's how to create a budget that works for your business. Start by listing all of your fixed costs. These are things like rent, utilities, payroll, and any recurring expenses that stay the same month after month. Next, list your variable costs, which are the expenses that can fluctuate, things like inventory, marketing, and equipment. Once you have these two lists, you can project your monthly revenue and compare it to your total expenses. The goal is to make sure your expenses are lower than your revenue, leaving you with a profit. If your expenses are higher than your revenue, it's time to adjust your budget by either cutting costs or finding ways to boost sales. And the most important part, stick to your budget. It's easy to get tempted by shiny new tools or opportunities, but if they don't fit into your budget, it's best to hold off until your finances are in a better position. Consistent budgeting will help you manage your business's finances more effectively and keep you on track to hit your goals. 5. Plan for taxes. Now let's talk about something no one likes but everyone has to deal with: taxes. As a business owner, it's crucial to plan for taxes throughout the year, so you're not hit with a huge bill when tax season rolls around. Here's what you need to do. First, if you haven't already, make sure you're registered with the appropriate tax authorities for your business type. Depending on where you live, this could include registering for sales tax, income tax, or other business-related taxes. Next, set aside money for taxes regularly. A good rule of thumb is to save about 25 to 30% of your income for taxes, but this will vary depending on your specific situation. The key is to save consistently, so you're not scrambling to come up with the money when your tax payments are due. Also, be sure to take advantage of tax deductions. Business expenses like office supplies, software, advertising, and even travel can often be deducted from your taxable income, lowering your overall tax bill. That's another reason why it's important to keep your personal and business finances separate. It makes it much easier to track deductible expenses. And if you're unsure about what you can and can't deduct, consider working with a tax professional to maximize your savings and ensure everything is done correctly. 6. Plan for growth and emergencies. Last but not least, let's talk about planning for growth and emergencies. As a business owner, it's important to always be thinking ahead, both in terms of scaling your business and preparing for unexpected expenses. When it comes to growth, make sure you're reinvesting profits back into your business. Whether that means upgrading your equipment, expanding your marketing efforts, or hiring new team members, investing in the right areas can help you scale more quickly. But don't forget to plan for emergencies as well. Life is unpredictable and unexpected expenses can pop up at any time. A piece of equipment might break, a major client might suddenly leave, or a new competitor could disrupt the market. That's why I recommend setting up an emergency fund for your business. Just like you would for your personal finances, aim to save 3 to 6 months worth of operating expenses in a separate account. That way, if something goes wrong, you'll have a financial cushion to fall back on. Having a financial buffer in place will not only help you navigate tough times, but also give you the confidence to take calculated risks and seize new opportunities when they arise. 7. Monitor your financial performance regularly. Now, let's talk about the importance of monitoring your financial performance regularly. It's not enough to just set up a system and forget about it. You need to stay actively involved in tracking how your business is performing financially. This is key to making informed decisions and avoiding any nasty surprises. So, how do you monitor your financial performance? Start by setting aside time each month to review your financial statements. These include your income statement, which shows your revenue and expenses, and your balance sheet, which outlines your assets and liabilities. By regularly reviewing these, you'll be able to spot trends, both good and bad, and make adjustments as needed. For example, if you notice your expenses are consistently rising without a corresponding increase in revenue, you can dig deeper to find out why. Are you overspending in a particular area? Are your sales slowing down? Catching these issues early can help you avoid bigger problems down the road. Another thing to keep an eye on is your cash flow statement. This will show you exactly how cash is moving in and out of your business. Even if your business is profitable, poor cash flow can still lead to serious problems, so keep a close eye on it. And if you need help understanding your financial statements, don't hesitate to ask your accountant or bookkeeper for guidance. Ultimately, regular financial monitoring helps you stay in control of your business's financial health, which is critical for making smart, data-driven decisions. 8. Manage your debt responsibly. Debt is a tool that many businesses use to grow, but it can also become a burden if not managed properly. That's why one of the key strategies for managing your business finances like a pro is to manage your debt responsibly. Let's start with the basics. Not all debt is bad. In fact, strategic borrowing can be an excellent way to fund business expansion, invest in new equipment, or hire more staff. The key is making sure that any debt you take on is manageable and affordable in the long run. Here's a simple rule of thumb. Never borrow more than you can realistically pay back. Always look at the interest rates, loan terms, and repayment schedule before you agree to any new debt. Ideally, the return on the investment you make with borrowed money should exceed the cost of the loan. If you're already dealing with existing debt, make a plan to pay it down. Start by tackling high-interest debt first, as this is the most expensive kind of debt to carry. You might also consider refinancing or consolidating your debt to get a better interest rate, which can save you money over time. Remember, the goal is to use debt as a tool to grow your business, not as a crutch to keep it afloat. Managing debt responsibly helps you maintain a strong financial foundation while keeping your business on the path to success. 9. Build a strong credit profile. Speaking of debt, let's dive into another crucial aspect of managing your business finances like a pro: building a strong credit profile. Just like personal credit, your business credit score plays a major role in your financial future. The better your credit, the more opportunities you'll have for securing loans, getting better interest rates, and forming partnerships with vendors. So, how do you build strong business credit? The first step is to make sure your business is properly set up with a separate business bank account and a business credit card. Use your credit card for business expenses and make sure to pay it off on time each month. Timely payments are one of the biggest factors that contribute to your business credit score. Another tip is to establish trade lines with your vendors. Many suppliers offer credit terms, allowing you to buy goods or services now and pay for them later. By paying off these accounts on time, you'll build a solid credit history that can boost your credit score. Finally, monitor your credit regularly. Just like your personal credit score, your business credit report can have errors or inaccuracies that might hurt your score. Use services like Dun & Bradstreet or Experian to check your business credit report and dispute any errors. Building a strong credit profile not only opens doors to better financing options, but it also helps your business appear more reliable and trustworthy to lenders, suppliers, and partners. 10. Reinvest in your business. Last but certainly not least, one of the best financial strategies you can adopt as an entrepreneur is to reinvest in your business. After all, your ultimate goal is to grow, and growth often requires strategic investments in different areas of your business. So, where should you reinvest? The answer depends on your business's unique needs, but here are a few common areas where smart entrepreneurs put their profits to work. Marketing and advertising. Scaling your marketing efforts can lead to more customers, more sales, and ultimately more revenue. Whether it's upgrading your website, investing in digital advertising, or expanding your social media presence, marketing is often a high-return investment. Technology and tools. Upgrading your business's technology can improve efficiency and productivity. Whether it's investing in better software, automation tools, or even new equipment, these improvements can help you do more with less and give you a competitive edge. Hiring and team development. As your business grows, you'll likely need to expand your team. Reinvesting in new hires or providing additional training for your existing staff can lead to better performance, happier customers, and more sales. Don't underestimate the value of building a strong team. Research and development. Reinvesting in R&D can help you innovate and stay ahead of the competition. Whether you're working on improving your current products or developing new ones, investing in your product or service is key to long-term success. But here's the thing: don't reinvest blindly. Be sure to analyze where your business needs the most support and where you're likely to see the highest return on investment. And of course, balance your reinvestment strategy with keeping an emergency fund in place for those unexpected expenses. The goal is to use your profits to fuel future growth. By strategically reinvesting in your business, You'll set the stage for continued success and keep your business moving forward. And there you have it. These are the key steps to managing your business finances like a pro. Even if you're just getting started, remember, it's all about taking small, consistent steps toward building a solid financial foundation for your business. Separate your personal and business finances, set up an accounting system, track your cash flow, create a budget, plan for taxes, and always plan for growth and emergencies. With these tools in place, you'll be well on your way to financial success. Which of these tips are you going to implement first? Let me know in the comments below. If you found this video helpful, don't forget to hit that like button, subscribe for more business and finance content, and share this video with other entrepreneurs who could use these tips. Thanks for watching, and I'll see you in the next one.